try not to listen to what they say. Always find it wears me down, 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 down.
All right, guys, what it is, what's going on, what up, man, what's good. Hopefully everyone is having a phenomenal day. Hopefully you guys had a good week. It was a good week. It's a wonderful week. And it's interesting because ego aside, okay? Ego aside, it feels good to do well when you can see that everybody else is struggling. Okay? Ego aside, it feels good when everybody's complaining that the markets are this, the markets are that, and then you're hitting home runs. You know? It just is, I don't know. It's nice. You guys agree? Drop a like. If you guys agree, drop a like on the stream. Let me know that you're here. Let me know that you're ready to learn. That you're ready to learn. And then all will be well. And then all will be well. Thank you. That was yesterday, wasn't it? Yeah. Yeah. What's good, Sean? What's good, Naruto? 2020 C Trades, Lucas, Ebernith. Eli says never gonna run around and desert the community. I like it. I like it. What's good, Lamoth? What's good, Monkey? What's good, Lazar? Alex C, what up? What up? Trillionaire Vadu, what's good? We'll see how many people we get on today. We'll see how many people we will get on today. So honestly, this was damn near the same setup back to back. Did you guys catch that? Not like did you trade it, but I mean like did you catch seeing how it was basically the same setup? Right? When we talk about how the markets repeat themselves. Oh, I gotta turn my mouse on. Turn me mouse on. There we go. Right? High, low, higher, high. We trade through that. Mitigation down to the lows. Same shit. High, low, higher, high. We trade through that. Mitigation down to the lows. So did you guys catch that? It's not picture perfect candle for candle. All right? You got to not see it that way. But I'm saying, like, look at it. Look at it. It's the same exact setup. The only difference is that obviously it's a different day, slightly at a different time. Thursday's play was during lunch. Gross. But with the exclusion of time and the fact that Wednesday's imbalance was above the mitigation, it's like almost identical. It's like twins. Do you guys agree with that? Do you guys see that? Drop a 1 if you can see that. It's the same thing. Mitigation down to the lows. Mitigation down to the lows. You want to learn how to be consistent. How do you be consistent? You take the same high probability setups. That's how you do it. Hold winners, cut losers. Okay? You want to find consistency. You find a good model. I've given you plenty of them. And here's my favorite part. You don't do dumb shit in between the good trades. Right? You don't take a good trade and then screw it up, and then take another good trade. Right? You try to take a good trade, wait a little bit, take another good trade. Okay? You try to not do the dumb shit in between the bangers, okay? That's the hardest part for people to do. Even for myself, okay? Like, we all struggle with that. It's okay. And that's why I said that in the Discord too. All right, let's do this. Drop a 2 if this is you. Or if this has happened to you before. How many times in the past, especially as a beginner to intermediate traders, I know this happens. How many times does that happen where you took a really, really good trade? Like it was a really good, maybe it was even 30 or 40 pips, and you just got a really good trade, and then you gave it all back in the next 2 or 3, 4 or 5 trades. You just gave it back. You caught 30, 40, 50 pips, and then you lost 10, lost 20, lost 10, lost 5, and then you just gave it all back. That one trade made up for all your losses, but then you had another set of losses that gave that big trade back. How many times? If that's happened to you before, drop a 2. It's even happened to myself. See, I'm not afraid to admit that. Fuck yeah, it's happened. Look at Tesla, man. Tesla, we had a good options play. We were up on the stock. It was up nice, and then it came all the way back down to the entry, you know? So, I guess that'll be our topic for the day. Not doing, like Alex quoted me, not doing dumb shit between the good trades. See my good setups. Oh, 150 pips. No, that's good. I was just trying to give a simple example. Most traders in the beginning don't hold for 150 pips. It's just, Nasdaq also reacted off the 1 hour Wednesday imbalance. I haven't even looked at charts today. Today's my first time looking at charts today. I slept in. I'm playing a new game. So I'm just like, man, fuck it. But after shorting Wednesday, high of the week, like, fuck, bro. Like, I'm good. I don't need to trade today. I don't plan on it. I definitely don't plan on it. But anyway, let me, I guess, give you the, I'm not going to give you a life-changing, like, you know, some inspirational fucking end of the movie battle scene speech, okay? But you have to learn, there's a couple disciplines that you need to learn, okay? And this is one of them that a lot of people struggle with, even myself, okay? Is you need, number one, okay, is you need to learn the ability to walk away. And this isn't new. I've said this before. This should not be new to you. All right. But number one is you need to learn the ability to walk away. All right. Maybe it's the morning time for you. Maybe you took a day off during the week, so you could either be here at the stream, or, you know, you just want a day to yourself to day trade. Oh, okay. And you say you wake up in the morning and you're looking for setups and you don't really see anything, but you force yourself to stay in front of the computer or in front of your laptop or whatever. No, you got to learn to walk away. Now, this also doesn't just apply for sitting out, like sitting on your hands. That is one. But I'm saying, like, okay, Monday or Tuesday, maybe you didn't do much. Wednesday, you found that nasty trade, right? That nasty sell-off that we anticipated on Wednesday. Say you caught that. Great. You had another opportunity to do that on Thursday, even if, or, you know, whether you took it or not. And we're going to talk about this in here as well. And there is a real difference between the highs here, and I'm going to discuss that with you. But what I was saying, what you don't want to do is take a really, really good trade, and then you feel like you know what you're doing. Like you feel like everything's come together, where you're selling high, covering low. You know, you're finally getting really good the trades that you've been dreaming and daydreaming about. You're finally getting them under your belt. And you can't let that ego slide in there where it's like, oh, okay, now I know what I'm looking for. I'm just going to start taking mitigation setups, or I'm just going to start looking for lows to short and start looking for highs to go to long to go higher. Okay, you gotta slow down a little bit. Okay, so what I mean is learn the ability to walk away. That goes not just for like waiting for setups, but that also means to like basically stop trading after a big win. Okay, now you don't have to do this. Okay, you don't have to just take a banger on Wednesday and say, okay, I'm done for the week. You could. I don't have anything against that. But how to not give back, how to not do dumb shit between the good trades is you take a good trade and then you just wait. Just like you did on Wednesday. I don't remember what we did on Monday and Tuesday. I have no idea what we did. That was too long ago. It was too long ago. I lied. We shorted Dow on Monday and into Tuesday. Oh, we had two bangers this week. We had two bangers this week. How could I forget that? How could I forget that? The 38,000 down here from up here. Oh, I thought my memory was fried. Not yet. Not yet. Okay. So we had a banger on Monday. At least the final TP was a banger. And then We went in on Wednesday and did that too. What did we do Tuesday? I don't think I did anything on Tuesday except for wait for Monday's trade. Okay, anyway. Monday, banger. Wednesday, banger. That's like 2 good trades. Easily stop trading for the rest of the week. Easily. Now, here's what you can do. Okay? I'm going to give you some options here. Because I'm going to keep it creamy with you. All right? Walking away, I'm not going to fucking walk away. I'm going to be here. But what you can do, I'll give you some ideas of what you could do. Okay? So after a big win or 2, all right, you can switch to a demo account. I know some of you don't want to hear that. No, John, I just want to fucking make money. I just want to make money, bro. No. Switch to a demo account or scale down in risk. Okay? Those are easily 2 Let me just divide that a little bit easier. Okay? So after you win, if you win big, 1 or 2, maybe even 3 back to back, mitigation model, whatever. You take a couple good trades. Okay, cool. You can do a couple different things. 1, you can switch to a demo account. Why do you think you guys have seen me do that this year? How many times have you heard me say that? Oh, I demoed today. Oh, this was by the way, this was a demo trade. Why do you think I'm doing that? Now, obviously, every trade that I show you is not a demo, but I'm saying, but a few of them are. Because I've taken a good trade, and then I've either switched to demo, or I don't like the conditions, but I still want to press buttons, so I hop over to the demo side. Right? Because then what happens? You get experience watching price, but you don't make or lose money. So you cannot be hurt monetarily. So if you trade with real money, with live funds, okay? If you get a good trade, if you switch over to demo, your live account is not going to go down. It's not. It's not going to go up either. But if you gain equity, that's only half the equation. You have to gain equity and then keep it. So you can switch to a demo account altogether. Now, I know some of you are not going to agree. I can hear it. Okay, I can hear you guys saying under your fucking breath, or you're thinking, man, that's stupid. I'm here to make money, John. I just want to make money, bro. Man, fuck that demo account. Okay. If you are not going to switch to demo because of your ego and your pride, okay, or if you know you just want to be a goober, if you're going to continue trading live, if it was me, I'd say, okay, look, you don't want to do the demo, you still want to keep it with the real account, fine. After a good win or 2 couple big wins, scale down the risk. Let's just say, for example, $100. Don't make $100 on a trade and then give back 80, 75, or even worse, 100. Okay? If you make $100 on a trade, only risk like maybe $20, $30, $40 on the next one. Full risk at least. Okay? You don't want to give more than half your profit back, dude. I'm telling you, you don't want to do that. You want to gain equity and then keep it. Gain it, keep it. And this is at least some way to do that. Walk away, have the patience, wait for the setup. Once you get a good setup, even if you played the small time frame and maybe got stopped out, break even, or a small loss, that's okay. You know, if you got stopped out and then saw the setup because you got in early, somebody on Twitter did that earlier too. Because they traded this. They got stopped out on the S&P yesterday. They got stopped out, break even. Shit. Was it yesterday? Or was it here? Man, I don't remember. I think it was here. I think they got stopped out on this run. On this right here. I think so. If I'm wrong, I'm wrong. But anyway, I noticed that they got stopped out break even at an imbalance. And don't worry, I've done all the dumb shit before too. Was that you, Leon? On Twitter? It was somebody. And I wasn't trying to be an asshole about it. Yeah, it was. S&P, 5 minute. Yeah, it was right there. It was like right inside that. It was like right there, stopped out, break even. Because I think they shorted here, right here. So it took a little bit of drawdown. That's fine. Goes your direction. But the problem with that is, look at it. The problem now is it's gone your direction. It left an imbalance behind, and then it formed this mitigation there as well. Well, at least on a 5. I don't know what the 15 minute looks like. But it's like you're getting out where you should be entering. Yeah, Leon, that's why I don't think it's you. Somebody on Twitter. Unless that is you. But anyway, the whole point is not to call somebody out, okay? Look, if I showed you all my dumb trades, you'd be like, okay, John. Like, all right, that's ridiculous. Because it's a lot. And I used to do that shit too. I used to go, oh, new low. Yeah, I'll go, break even or whatever. But you got to realize, if you're in from up here or you're in from up here, if the market sells off and you realize, okay, we've got new candlesticks, we've got new information, this might be a mitigation model. So you have to anticipate for the market to come back up there and then continue. This is why those Twitter goofballs tell you, oh, just place your limits, place your orders and then walk away. No. If you're a retard, you can do that. Sure. If you want to be stupid, by all means, do that. And just don't look at new information. And then what happens? You get fucking stopped out right before the big move. I've done it. You know how many times it's happened to me before? It's going to continue happening until you learn the lesson. Okay? Now I can sit here and tell you all day, every day, stop doing this, start doing that. And you're going to be like, okay, it sounds good. But then when it comes to actually trading, then you don't do it. You're going to continue to do it until you learn your fucking lesson. This is what I was looking at yesterday. This is just some imbalance, run on the lows up to the highs. But I was just demoing in there. It wasn't nothing crazy. But anyway, the point is short-term highs, trailing stops, imbalance. There's a 1 minute mitigation up here too. It's like you're getting stomped out right at that high to go lower. But you know what? Let me tell you this, okay? Because I get this sometimes too, as especially as an educator. People will tell me, because it happened to one of my students earlier this week too, and they said that I don't know which setup it was, but let's just pretend for a second that it was up here. Let's just pretend that they got stopped out at this high. Okay. And then it ran to the lows that they anticipated. Do you know how frustrating that is, chat? Do you know how frustrating that is to short? The market goes your way, you get stopped out, and then all of a sudden you see, whoop, sprints to your TP. There's no up candles in here, folks. There's none. None. Look at this. 1, 2, 3, 4, 5, 6 down candles back to back. 6. Running for the lows, running to your TP, but you got stopped out prematurely. Do you know, bro? I've never actually punched a hole through the wall. I've never actually been that angry before. I know people who have, but you know, it does get you angry, get you fired up, because you're going, oh my God, I got stopped out before the big move. You need to journal that. You need to write that down. You know why? Okay? Here's the thing, and I'm not going to say this often because I don't want this out there. But do you know why I come on here and look at GJ? Bam, few hundred pips. We look for Wednesday's Nasdaq, right? Oh, this should be the high of the day. This should sell off. That was Thursday. That should be the high of the day. This should sell off in a PM session. And it rips ass in a PM session. I look like I'm controlling the markets. Seriously. But I'm not. I have a lot of experience. And you know what that means? I have a lot of losses. I have a lot of losses. And you know what? If I were to ever, this won't happen, but if I compiled them together, especially the break evens, if I compiled all those break even trades, or even like stopped out right at the high, it would be stuff like this: shorting, new low, stop at a recent high, grabs that high, and then runs your way, and you miss out, and you miss out. And that's so frustrating, missing money. Or even same thing in here, where you shorted, when break even too fast, or you move your stop too fast, you get boinked out, and then it runs your way. Or like today's price action on Nasdaq, look at this. It didn't do the same thing that the S&P did, because the S&P set its high, but it ran a short-term high right there at 11, and then ran lower. I can guarantee you, someone somewhere out there, there's a transaction here. Okay? There is a actual transaction. There is a recording where the high was 49.31 and a quarter. Somebody got stopped out at 49.31 and a half. They got stopped out by a tick. They got filled at 31.50, and then they watched this thing absolutely dump 20 points. That's $1,000 a contract. They just missed. Well, yeah, on ES, 20 points, $1,000, $1,000 per contract. So imagine missing out on $1,000, $2,000, $3,000 in a matter of an hour. Internally, that is going to destroy you if you're not emotionally all there. You understand? And that's happened to me a lot. Why do you think we target things like low resistant lows? Why do you think I have the Y slime model? Your stop loss is my entry. Where do you think that came from? Your stop loss is my entry. That, I created that because it happened to me. And it's not a hard logic. You reverse engineer it. Well, shit, dude. If I shorted this imbalance and a stop at this high and I got stopped out before the big move, all right. Well, maybe next time, instead of just shorting, I will short at the high with the stop at the higher high. So now I'll enter where I used to get stopped out. Your stop loss is my entry. That's the whole point. That's why it's called that. Y slime. And that's the idea. Where other traders are getting knocked out, I want to be getting in, or you want to be getting in. It's shorting above old highs or buying below old lows. Not that I would do that today, but I've gotten my ass kicked so many times in the past. It's ridiculous. That's the only reason I'm very, very fucking good at this. Okay? That's the only reason. And I'm not going to tell you that all the time because I don't want to keep admitting to you that I know what the fuck I'm doing. But that's the reason. I know what I'm doing because I've been burned so many times. I've studied this so many times. I've broken even so many times. I've taken so many fucking losses. It's disgusting. But you see where it gets you, though. Right? What did J. Cole say? Coal under pressure, what that make? Diamonds. You're trying to learn how to like trade, or you're trying to learn how to finesse without going through things. Let me tell you the difference. Or at least let me tell you what the distinctive difference is in here yesterday on Thursday. Okay? This is what we're going to do. There we go. 2024. All right, give me a second. Okay. So, the secret, well, it's not a secret, but it sounds good, but the this formation you should know about. Okay, I'm gonna go over this in just a minute. I want to catch up on the chat. I've been neglecting you. I'm sorry. I try to get, you guys know how I get sometimes. I gotta let it all out there and then not catch up because I get thrown off if I read everything and keep going. But yeah, Nick, I agree. Pressing buttons on a demo is way better than a live account. If that's what you're itching for. We're all button junkies, bro. We all want to press buttons. We all want to trade. That's what we want to do. But it can't always be live. It's okay to switch to demo. Button junkies. That's what we are. Maybe that's what our community name should have been. I don't know. When I first started trading, I didn't use demo. It took some time to undo all the psychological / financial trauma I caused myself. Yeah, I agree, Alex. That's why so many people quit early on. 90% of traders lose 90% or more of their money in the first 90 days. It's like the 90-90-90 rule. It's good, Pop. Yeah, you came in at a good time anyway. I got stopped out on AU and didn't feel comfortable trading after that. I didn't understand what was happening. I have to study today. I'll look at Aussie in a minute. But again, I haven't looked at charts today, so I'm out of it. I usually take Fridays off anyway. It's fine. I stayed way too late last night. It's cool. It's cool. Tiago was stopped before the big move. Journal that, bro. Journal it. Trust me. Give it 6 months. Give it a year. Even like 2 years. I know some of you don't want to hear that. Oh, John, two years, bro. 2 years? Motherfucker, I've been doing this for 10. 10. 2 years is not a long time. I've been doing this for 10. So relax. You're going to look back on those journals and be like, yeah, I remember those times. I remember those times you used to getting stopped out before the big move. And now you remember that going into your next trade. You see that. You see yourself in the market. You go, here's a high. Oh, I bet people got stopped out on that. Drops lower, makes a higher high. Oh yeah, people definitely got stopped out on that, especially when the ES is making a lower low. Oh, well, the one that trades higher, right? The one that manipulates usually mitigates, right? And you go, oh yeah, John says that shit sometimes, and then, there it is. Manipulates, mitigates. And those little maxims, those little sayings and shit, that's how you're going to get banger setups. Because you're going to go, yeah, that would probably have stopped me out. Or maybe you did get stopped out and you go, you know what? I traded prematurely. I got stopped out prematurely. That's okay. I took a small loss, but I'm about to get that loss back plus a lot more if it goes to my original TP. So why are you worried about a small loss? You're worried about losing $100 or $50 when you can make 200, 300 on a move? Get out of here. Get out of here with that bullshit. Anyway, this is what I'm trying to get at. This is the formation you need to know about. Okay? I've always talked about relative strength, right? We look for exactly what we got here, where the Nasdaq is trading higher at the same time the S&P is trading lower. Now, that is right before lunch. I despise that. But in the traditional sense, this is right. But I will have you know that the formation you need to know about goes a little bit beyond that, at least in this scenario. Because we can always go back and look at scenarios where there's only two highs, meaning this isn't like this, but just pretend like it is, where you have a higher high here and then S&P making a lower high. Just pretend it's doing that. Okay? That by itself is fine. Okay? That's fine. But there's a difference, okay? You want something to study this weekend. You want something new to add to your arsenal of tools. I've given you a shit ton of tools the last few years. Okay, you want to add something to your toolbox? Do you want to add something? Drop a where'd my fucking emojis go? We haven't done that in a long time. Drop a money bag. Drop a money bag emoji if you guys want to add another tool to your arsenal. Another little tip and trick and, you know, shit that really helps you. And it's the simplest of things. It's the most simplest of things. A lot of us never notice that it's there until somebody comes along and points it out. It's the same for me. I didn't know it was there until somebody showed me. The master has failed more times than the student has ever tried. Yeah, that's a great quote, Nikki. I forgot who said that, or like originally, but yeah, no, it's totally true. Not that I'm calling myself a master, but it's the idea. You see people who know what they're doing, it's because they've been burned a lot. Okay. Here it is. All right, here it is. With the exclusion of time, because this headed into lunch and I despise that. But there is a difference, okay? When you look at the Nasdaq trading higher and the S&P going lower, now if you notice that by itself, that's fine. If you trusted that by yourself, that's fine. But here's where it gets more interesting, okay? The Nasdaq, okay? This is also how you know it's manipulation. Not just, again, I want to make this clear. This inside the gray box is fine by itself, in my opinion. But if you want to add something to your toolbox, okay, you need to notice all three. Okay? All three. So we'll take ES off. And we'll come back to the line chart. I mean the candlestick chart. And fuck the line chart. Okay? This is a little bit different. All right? We still have our lows mapped out from London. Well, London's low is technically down here, but, or London's low, excuse me, is here, but we have consolidation and then low resistance lows here. But right here, okay, this is manipulation. We have a high at equities open. Great. Equities open drops down. So somebody's short at the open. I usually don't trade right at the open. That's just me. Sometimes yes, usually no. Okay. Somebody did. It trades down, lower end of this imbalance, cool. And then it rallies up. So anyone who was short, bam, they got stopped out. Above this high, there's a candle there, right? There's a wick there. That means there's business and commerce being done. That means somebody bought that. Someone else shorted that. Market trades lower here, or even this leg here. Great. Somebody's short from up here. Doesn't have to be you. Who cares? It's somebody. That's fine. So when the market trades lower, where do their stops go? To that high. Okay. So you have a short-term high here, like the equities open high, rather. Stops. It trades lower. It never really makes a lower low anyway. But then the stops get bumped again. Okay. So stops, like buy stops, sell stops, whatever, stop losses, trailing stops, all that shit. Orders are always going to follow recent highs and recent lows. Okay. So it's the first high, second high, and then this third high here, right? Look at that wick. Okay. And then actually we'll give it one more candle as well. Okay. Look at this candle up here. That one. You see that? Even though it still closes above that old high, that's fine. It's a 5-minute time frame. But look what it's doing. It's reaching for that liquidity and then coming off of it. So it's jabbing up there. Okay? Like, you know, like boxers, right? They jab, right? That's what it's doing. It trades up, immediately back down. Right? I believe if we go to a 15-minute, look at the 15-minute, that gives it a little bit more context, doesn't it? Let's move that. Okay. The 5-minute closes above that, small time frame, whatever. But then look where that 15-minute candle closes. Look at this candle. Okay. What is I forgot, I think it was Iffy or Siva who used to talk about the anatomy of a candle. What's the storyline here? Okay, you have every candle has 4 things. OHLC, open, high, low, close. What was the storyline for that candle at 10:45? Opens, trades lower, rallies up to the 750 level, a little bit past that, and then trades all the way back down to the 724 level and then closes. So what was the storyline there? It opened, traded lower, traded higher, and then traded lower to close. Do you see that? It's kind of a weird fucking thing to draw, but that's what it did. Okay. Opened, dropped down, rallied, and then closed near where it opened. Okay. It closed near where it opened. At that time, on a 5-minute or a 15-minute time frame, you look at that, you go, oh shit. Well, that's interesting. And right now it looks bullish. Man, this is an uptrend. This is a channel. This is higher lows and higher highs. Man, I wouldn't short that. You wouldn't? You wouldn't short that? Because it pretty much ripped ass the rest of the morning. Well, during lunch and the start of the afternoon session yesterday. When you see that, okay, I think that's the same high on S&P. Thursday at 10:45. Thursday, yeah, okay. I don't want to give you bad information here. Look at the S&P. It didn't do that. It couldn't. The S&P did not reach above that, but Nasdaq did. That is your signature right there. That right there. Even matter of fact, you want to know? All right, I got to flex a little bit. You want to know why on, because none of you asked me this. None of you asked me this. And that's not a bad thing. But I told you I got in before this imbalance formed. I was in above the imbalance. None of you asked me why. Oh, wait. What do you mean, John? You didn't wait for the imbalance to form and then short the imbalance to go lower? No, I was in before that. Whoa. Wait a minute. Hold on. You're shorting at the high, or close to. I didn't short up here, but I got close to it. You're shorting before the imbalance even forms. Why would you do that? Because, my friends, when you see, okay, when you see shit like this, it's coming off of that old high or even above this old high, and the S&P is too weak to do that. I don't need to wait for the candle to close. I don't need to wait for it to trade lower, form an imbalance, and then get in on that to go lower. I don't need that. If it's there, it's there. I know the formation. It's just like with what I've been teaching you guys, right? The whole framework idea where, all right, we've got lows. We wait for it to show its willingness and then get in on a mitigation to go lower. The mitigation model, okay? Honestly, it's fucking phenomenal. It is, because what you're waiting for is evidence. Like, you have your suspicion, your suspiciousness. You are suspicious about this, okay? English. Once it trades lower, it shows you the willingness, and then you're entering after that to go lower. You're sacrificing the sniper entry for a more, I don't want to say guarantee, but a more high probable idea that it's going to trade lower. Because you know what the formation is. Oh yeah, run stops, trade lower, mitigation and imbalance for the short. You know that. If you see the high that's forming and you see 1, 2, this is the third high, the third one, and you're looking at ES and you're going, oh shit, well, that's not doing it. That's a short, in my opinion, right there. Okay. That's why. And again, I'm still surprised none of you asked me that. It's okay. I'll still tell you. That's why I shorted in here, because the Dow on a small time frame was trading above a short-term high right here, or that first one right here, and then it trades above it again right there at 9:20 on Monday. Let's go to S&P. 9:20 on Monday. $9.20 on Monday. It's right here. The S&P is lower. Dow's higher. Yeah. Why did I short Dow? Even though it was the strongest index, and that was, you know, not the greatest, but because Dow had the cleanest target for the downside. And that to me is absolutely distribution. So you know what? This is how it goes. You ready for this? I'm shorting at the high. At like the higher high. I'm shorting that. And a lot of traders, even myself sometimes, I'm not afraid to admit it, even myself sometimes, I get a little scared because I have to have a relatively small stop because this thing could fucking fly still. But it's like, no. This is distribution. I've seen this before. I've seen it thousands of times. Okay. This should sell off, right? So I short it, right? Now here's the problem. I short. Let's go back to like 5 years ago. Okay? Maybe like 4 years ago. I'd short. Market, I don't even know which small time frame low in here, but let's just say we get a sell-off. Then, oh shit, let me go break even. Boop. Get out of break even. Oh, okay. Maybe I'm wrong. It's fine. Not a big deal. And then rips ass. And I'm going, oh, I had the high. I had it. And then you watch in agony, in pure agony, how you were in up here and it ripped ass. Overnight didn't do much. And then you wake up Tuesday morning and it's absolutely below your target. And you go, fuck. I took a break even on a massive, massive trade. Right? Not anymore. You know the framework. You go, okay, it forms an imbalance. Remember Wednesday? Remember Wednesday, one of you asked me, you were like, John, you're already short, right? But you've got an imbalance there. And I said, well, I don't think it's going to trade into the imbalance before it goes lower. I think it's going to be a breakaway imbalance. But then what did it do? It came right back into that imbalance and then traded lower, right? Do you think I had my stop loss at the imbalance? Do you think that? Where was that? Here. Right? Yeah. Right here. Do you think, well, this was an options play, so like, technically I didn't have a stop loss, but in options, if it hits this high, I would just manually close it. So it's more of a manual stop. So by definition, I didn't have a stop loss, but I would have exited the trade had it bumped this high. Okay. So essentially, Tiago, my stop, at least for the Nasdaq trade, was here. Okay. Would I have my stop loss inside of an imbalance? Why would I do that? Why on earth would anybody do that? Now, can you have a stop loss at the high end of the imbalance? Sure. Sure you can. It's kind of a tight stop in the futures market. Now in Forex, I wouldn't do that. In Forex, I'd go to the high and then add 2 or 3 pips on a currency. In futures, you can have it at the higher end of an imbalance. Not financial advice. This is just me talking to myself. I'm allowed to have it at the high end of an imbalance. But at the low end of an imbalance, fuck no. Because I got to give the trade room to breathe, right? Let's go back to Dow. I know I'm kind of all over the place. Sorry, I'm excited. I'm trying to give you some really good fucking information here. If I'm short and then the market sells off and the first signature in price, like the first signature is an imbalance, that could be left open, or it could come back into that to offer buy-side delivery before going lower. So why on earth would I place my stop loss inside of an imbalance? Now, once it leaves, right? Once this down candle here, it like traded into it and then fell off of it. Maybe this down candle here. Oh yeah, I could easily go break even after that, especially after this down candle at 10 o'clock. That bitch dumps. Oh, I'm definitely break even. Definitely break even. Because that was the first take partial here on a 15-minute imbalance. It's there. But I would absolutely not bump my stop to a break even if that's inside of a 5-minute or 15-minute or some sort of small time frame imbalance. Because that's happened to me too many times. I get stopped out on this and then it rips lower. It's ridiculous. And trust me, if that's happened to you before, you know what I'm talking about. That's why I opened up today's live stream with that. Because I should be talking directly to you. Oh yeah, John, I've been stopped out at the high, or I got stopped out at the low and then it turned around and went my direction. I would have made money, but I lost money, even though I was right. It's not about being right. Trading is about making money. Period. Now, to be right and make money, obviously that's best of both worlds, right? But it's not about being right. It's about making money. So you have to allow the market to work before you move your stop. Okay? So when we talk about stop loss placement, we've done quite a bit of that. When we talk about not moving your stop too early, okay? Have you ever studied price? That's stupid. Of course you guys have. But I'm saying, like, you ever looked at highs and kind of why they do what they do? Take a look. Take a look at this second leg here. The first leg is here, meaning from the high down to a low where it retraced. Okay, like there's like small retracements in here, but I'm not looking at that. This is the first leg. What I mean is, take a look at this second leg right here. It extends all the way down here. But take a look at this leg in price. Okay? Now I want you to really think about this. I want you to really look. This is a 5-minute time frame on Nasdaq from yesterday. So for your own charts, you're more than welcome to take a look. Unless you just want to look at mine, that's fine. But look at this. Okay? What actually takes place at 12? This is the beginning of the afternoon session for me. 12 o'clock. Boom. Right there. Bam. 17,651 and a half. That's opening price for the afternoon session, PM session for me. I want you to look at this chart. Okay? I want you to look right here. What do you think's happening right here? Look at this. What do you think's happening? Oh, that's just normal fluctuation. Really? Really? I do not believe that. I don't believe in, natural ebb and flow, natural fucking ebb and flow, gyration of price. No. There is a reason that it's doing what it's doing. What's it doing right here? Remember what we talked about up here? How the 15-minute time frame, it scooped that high and then ripped, right? Look at it. The liquidity, remember, is here at 17,610 and below that. That's what this level is. What is it doing at 12 o'clock? Afternoon session opens, my humble opinion. It rallies, right? What's it rallying for? This short-term high at 1140. This one right there. Boom. Trades above that, closes below it. Okay, cool. That might be a stop run. Next candle opens, rallies again, trades off of it, closes below that short-term previous high. Oh. Well, damn. Does that look bullish? If you were in a long position, like down here for whatever fucking reason, if you're long and your candles go your way and then come back, go your way and then come back, if you've ever watched a trade before, has that ever panned out? Has that ever panned out? Where it goes your way, back to your entry, or back against you, goes your way and then back against you? Has that ever actually gone to your TP after that? Probably very rarely. Especially if you're watching it like candle for candle, which you probably shouldn't be, but it's fine. No. It's running stops before it runs lower to grab the other stops. What does the market do, guys? Where does it move from? I know it's been a couple days since I've said it. The market moves from what to what? Liquidity. Liquidity. This low here is technically liquidity. Liquidity there, and then liquidity below these lows, which it sank for, but I'm just gonna measure right there. Okay. The market moves where the orders are at. Liquidity to liquidity. Okay. There's a small imbalance here. There's a small one right there. The market trades into and then off of it. Small imbalance here, and then that short-term high. So that's why, to me, like when I look at this, that's what I ask myself. I'm like, well, why didn't it trade up into here? Why does it do that? Or why didn't it do that? because it doesn't need to. A mitigation is here, and that rebalanced, well, I'm not gonna say rebalanced, but I'm saying it traded into this imbalance, which is in this mitigation, and traded away from it. So it does not need to trade back into this. And if it's not going to do that, then it's sure as shit not going to trade into the imbalance above it. Is there any imbalances within here? Not really. So there's just the short-term high. That's all it ran for to go lower. So short-term stops get ran. High time frame stops get ran. Medium time frame stops get ran. It doesn't matter what time frame. Wherever the liquidity is, that's where the market will go. That's where it's going. The market doesn't know specifically about your stop loss, okay? Especially if you're on a demo, it's definitely not going to fucking know. But in a very general sense, the market knows. You ever ask yourself why it just so happens to build up lows to only then run it later? What kind of sense does that make to someone who doesn't know about trading? Oh, the markets go up, they go down, they go up, they go down. Yeah. But really think about it. What is it going to? Where is it coming from? It's order pairing. It's going to gyrate where the orders are at. Reach into the orders, reach into the orders, reach for opposing orders. It's that simple. And recognizing order flow will help you with stop loss placement. That's why on Dow, I didn't go break even before that imbalance. I waited until after the imbalance saw a reaction, then I went break even. So, I mean, I only had, I think maybe I was in open risk for maybe like 20, 25 minutes, and then I'm break even fast. With the Nasdaq yesterday or Wednesday, because I shorted in here, like right at the open of the afternoon session, because I said it would be a bearish PM session. So it was like a 1 minute entry. That's fine. But where's my stop going to go at this high, right? Look at this, okay? Because I think I told you guys it was, I think it was based off of like just this up candle right here. I mean, it wasn't the greatest entry in the world. It wasn't. It was like I was getting in. I knew I wanted to be in, okay? And I wasn't going to wait for an imbalance to form. Or like I wasn't going to put an order here in case the market, just like I told you in the live stream, where if this is a breakaway imbalance, it might not trade into that. So I'll get in a little bit early. So it immediately goes my direction. Okay, fine. But that imbalance is still here. So I allowed the market to trade into that. Then we rip. So if I went break even as soon as I went into profit, I would have got stopped out before the big move. You don't want to do that. You want to wait. Oh, okay. Market trades lower, doesn't retrace for shit, makes a new low. That was the partial I said near the end of the, right at the end of the session. And then not even 10, 15 minutes later, it runs right into the lows. Final TP, money made. See you later. And then after that, I haven't taken any trades since then. So that right there was enough. I probably could have traded yesterday, but I decided not to. And then I definitely didn't trade today. So, you know, I guess if I did, this is obviously hindsight, but the net or S&P is the only one that had lows that were enough for me for a target. But this was during lunch anyway, so I probably wouldn't have traded this. So I'm glad I didn't wake up and watch that, because I probably would have missed out. But yeah, either way. Coming back to the beginning, you need to learn the ability to walk away. You need to learn the ability to, if you take a good trade either to lower your risk or switch to a demo account, build equity, and then keep it. Don't lose it. If you guys got some value today, drop a like on it. I would appreciate it. It lets me know that you're here and that you're paying attention. Unless you're watching me like on your phone and you're at work or something. Don't get caught. And don't blame me if you get in trouble. Okay? But yeah, that's pretty much going to be it for today. The wick grabbed the stop loss, the body closed below the previous high, right? So note that. Note the 3 highs I gave you. That formation, that's now added to your arsenal of measuring price. Not just the divergence, but if there's a high and then a higher high and then another high. If there's 3 highs and a divergence, oh, chef's kiss. If there's 3 highs on one of them and then the other one makes a higher high and then a lower high, where now you have a divergence, that is absolutely distribution, in my opinion. Okay? It's manipulation, but that's what you got to wait for. Don't try to, in the beginning, don't try to just predict that. Like with what I did on Monday, don't try to do that. I promise you, you don't want to do that. Okay? Like up in here, you don't want to short right here. I teach you guys to let it rip and then play the imbalance to go lower. Honestly, I think that's the best way to do it. In my opinion, I think that's the best way to do it. I just happened to get in a little bit early because I saw it. I said, fuck it, I'm getting in. I wasn't in drawdown for too long. So, but I've seen the formation. I saw the Dow was the only one. There's only 3 indices. Dow was the only one higher. Okay, great. That's distribution. I was wrong for a little bit. Then I was right. Came back near my entry. That's just a 5-minute imbalance. Leave it alone. Rips ass. Done. Okay? Eats up some of the position when scalping with tight stop. Yeah, I agree, Cameron. That's why Forex blows. Forex fucking blows, dude. Futures is where it's at. I'm sorry. Forex sucks. Sure, I was a corporate Forex educator, but I'm teaching price. I'm teaching price, bro. They all do the same shit. But yeah, trade management is different because you have to incorporate spreads and all that. It's more difficult. But futures, no. I'm going to break even fast as fuck, boy. Super fast. Long on Nasdaq? Where? Where would you even long on Nasdaq? I was trying to watch these short-term highs for a minute. There's like triple highs on a 1-minute time frame right there. I was trying to watch that. I'm absolutely not trading today, but I'm just looking at it. It's like, okay, we ran this low, rallied. We didn't, there's not a mitigation here, but there's an imbalance right here. It rallies, there's another imbalance right here. Right there. So it trades into that. I'm trying to see if it's going to launch higher. But again, I'm just watching. Like this, I would demo. Like I would demo long here. And just see what happens. But would I take this on a live? Nah, probably not. Probably not. But it's Friday. I'm not looking for anything. Especially Nasdaq. Nasdaq is our weakest index today. I'm not longing the weakest index. Bulls take the stairs. Bears jump out the window. What's the difference between US 30, MYM? So MYM is the micro futures. YM is E-mini futures. And then US 30 is a CFD. Thank you, Lucas. Appreciate that. Thank you, C Trades. Thank you, Zach, Joe, Eli. 9 a.m. my time. On what time frame? You said Nasdaq? What are we talking about? There was a long opportunity on Nasdaq at 9 a.m. Oh, in here? I mean, I can always look at something that's hindsight for sure. Yeah. Ran a not London's low, no, but a low during London, sure. Low resistant lows there, swept. 920, it trades to the upside, leaving behind an imbalance. That's actually the mitigation model here. Because you have those 4 up candles together, and then you have an imbalance inside of that. It's rather immediate. I mean, that's 1 candle, 1 minute later, 1 minute later, and then it takes off. So yeah, that is a long, based on the mitigation model, yes. I would argue that 100%. Especially that wick. See? Same shit. It's the same thing I just told you. How it wicks below that and then closes above it. That's an absolute fucking stop run. I'm telling you. Look. Here's the last thing I'll say. You know we've got like 20 last things. I told you. Okay? I told you 2024 was going to be your year. I told you that. I told you that. You may not know how just yet. You might be new here. We get new Smart Money Stoic members all the time, almost every day. So you may not know how just yet. But I'm giving it to you. I'm breaking it all down. I've even came out and said all the time, this is the mitigation model. It ran stops, mitigation and imbalance overlap. That's a 50 level right there too. That's just the icing on the cake, baby. A 50 level or a 20 level or a 0 level, that's just extra. And look how quick that is to run. Now, I don't know what the high probability target would be on this, I guess, other than this high. But, you know, that was still pretty good. So, let me get this 1 or 2 more minutes here. I just want to see if this is right. I just want to see if I'm right. Spent a lot of time in that imbalance. You ever seen you ever guys been to a recording studio and you see all the buttons and things to move? That's kind of what that looks like right here. With all these dumbass candlesticks. Looks like a fucking recording studio. But yeah, let's see if we get a launch. Like 2 or 3 points. So 2 points might not sound like a lot, but that's $100 a contract. From here to this high is $100 a contract. See, take a look at that. Take a look at that. It hit that down candle right there. You see that? Hit that down candle. Down candle, fractal low, fill it in balance. This should fucking launch. For like 2 points. For like 2 points. That should launch. You know? Ugh. So I'll give it I'll sit here for just a minute or two. And then that'll be it for the week. But yeah, this is your year, dude. I'm telling you. I don't know how many models I've given you. I don't know how many times I have been able to explain to you what the market's going to do before it does it. You know, am I the greatest mentor alive? Oh, no, I'm not. But do I think I know how to help you? I think so. I think so. And I think you're in a good place. If I If I wasn't a good trader, if I wasn't a good analyst, I wouldn't have made a community. I would have never became an educator. But people had asked me so much, I finally gave in and said, fuck it, I'll do it. You know? Let's see. So let's see. Let's see if we get that extension up there. One minute time frame, dude. Sometimes they fucking dilly dally. Thank you, Edmund. Appreciate that. What's good, Yen? Yen Profit, what's going on? You got a question? Let me just come back to this real quick. Because that's the thing, too. I don't even know what the other indices are doing. Dow has a distinctive high, but it's not like triple highs per se. Nasdaq doesn't either. It has these gross highs here. So the S&P has the highest probability target, in my opinion. So hit this. I want to watch this down candle here. Again, I'm just watching it. I'm not telling you to trade it. I'm just watching it. I told you I'm not going to trade this live. Not here. The risk reward isn't that great. Thank you, Paulus. I appreciate that. I used to learn from you and Zach and Jordan a while, 2 years ago. Good to see you're still going. No, I left IM like almost a year ago. Probably like 9 months ago. Yeah, I left that fucking shit show. As did many other educators and most of their customers. But we're not going to talk about it. We're not going to talk about it. See, oh, what the fuck? Now we just left a set of equal highs. Another buildup of liquidity there. Yeah, so like where it's at now, like this is hard for me to long because it's spent so much time in this imbalance. That's hard for me to trust. I wouldn't trust it. Not here. Not here. I wouldn't trust it. Oh, okay. 49.10. Yeah, I don't know. I have no idea. I mean, I'll keep an eye on it, but I'm not going to be here for forever. Plus, it's Friday anyway, so I know you guys got shit to do. So, but yeah, that's what I'm gonna leave it with. I was trying to see what's over here. I don't know. I don't know. But yeah. With that being said, I will leave you guys with that. We went over a lot of stuff today, so hopefully you guys took notes and, you know, got some new ideas on how to build equity, how to keep it, how to be patient, how to not go break even too fast, you know, more on framework, more on liquidity, a few more examples of the mitigation model. What the fuck? That looks like you just ran that previous low. And all that. Okay? Totally for free, by the way. You don't need to pay $200 a month to be here. Okay? Take a zero off of that. Take a whole zero off of that. It only costs $25 a month to be in our community. So, you know, it is what it is. That looks like a stop run. but I'm not going to over manage, like over analyze what we're doing here. Yeah, the 5 minutes not looking too clean. Oh, wait a minute. Sorry, I'll give it a couple more minutes. I lied. I'll just give it like maybe 5 more minutes here. Because it looks like it just ran that on a small time frame. And this is why I'm cycling through the time frames. I'm trying to see what was here. Maybe this 5-minute imbalance, I guess. It's just, I don't know. I'll give it 2 or 3 more minutes. But yeah, you guys are, I mean, that's pretty much the lesson for today. $49.10 and $49.19 if we get a break on the high and hold for sure. I don't know. I personally think it's going to trade higher. But if it goes lower, I ain't going to lose fucking money because I'm not trading this live. Hell, I'm not even on a demo. I'm just watching it. I have no skin in today's game. None. Well, other than my stocks, sure, but that's like, that doesn't have anything to do like with a 1 minute time frame. Know what I'm saying? But real quick, I'll give you like 2 more minutes. And with that, what do you guys have planned for this weekend? Somebody better say reading or I will fucking lose my shit. What are you guys doing this weekend? What plans do you have? Work. Get your money, bro. Get your money. Lucas says reading all weekend long. See, that's what I like. That's what I like, Lucas. Get better, says 7. Not a bad answer. Driving my Lamborghini and buying Rolexes. I like it. I like it. I thought Rolexes were expensive, and then I found out about Patek Philippe's. You don't even want to know. Shit is ridiculous. Like, ridiculous. Fucking $200,000, $300,000 watches. Like, bro, are you serious? Like, come on. Going to go snowboarding and read up at the mountain. 2020, you got to post that. You got to post a picture of that in the Discord when you do that. That sounds incredible. C-Trade said studying. Cameron says hike, gym, read. Well, if you hike, that's like your gym. And if you hike with a book, that's efficient. I don't know. Read, study, work this outdoor event all weekend, says Eli. Man, all of you guys are being out, like going to be outdoors. I got a new video game, so I'm probably going to be a vampire. Reading and setting a schedule / plan for next week. Also studying and time with the lady. Nah, Naruto, I like that. Edmund says reading Atomic Habits. That's great. Oh, shit. That reminds me. I didn't do book of the month for February. Shit. I don't know. I'll figure it out this weekend. And I'll let you know. Rose Gold. Yeah. The Rose Gold AP. Yeah, appreciate that, 2020. What am I playing? I'm playing a game right now called Pal World. I spent like 12 hours on it yesterday, and I think like 10 hours on the day before. I don't think I've seen the sun in like 3 days. I probably should do that. What I think about the prop firms doing time limits. Oh, dropping time limits. No, I think that's a good thing. I think the time limits is what puts too much pressure on the traders. And I think getting rid of that is helpful. Yeah, this just looks horrible. It's a great game. Yeah, I've been on it. Farming. Flying around on a fucking dragon I named Marcus Aurelius. So, but yeah. All right, well, we gave it a few minutes. It didn't launch. It probably will after I get off the stream. That's probably what it will. So, well, I'll just cut it here, man. I don't think we need to be here for a long time. But yeah, y'all be good. Have a blessed weekend. I'll see you on Monday. Enshrouded. Saw Shroud play it. Check it out. Yeah, we'll have to see. But yeah, y'all be good, man. I'll see you Monday. And now we're going to get the launch after it took this previous low. Oh well. But yeah, see you Monday, guys.
I wanna do is go back in time. Go back in time to another place in mind. I want a perfect life. No more lies. Secret eyes. Wanna go back in time.